Let's start with Amgen, right? So we're going right to the top of the global league tables in a biotechnology company. Blockbuster drugs include Neupogen. So if you don't know what that is, that's EPO, right? That's the bone marrow production during chemo that people take. It's also the stuff that cyclists are not supposed to take, otherwise they're doing a little bit too well on the Tour de France. But they've got other drugs in the pipeline, a whole slew of them, stuff for arthritis and so on. The original development theory behind the company was splitting the gene, so using gene therapy in order to develop these kinds of drugs. But there are a whole lot of new things coming too. They've got an exciting PCSK9 drug, which is for cholesterol. We'll talk about that in a minute. Market capitalization, $114 billion. That puts it in perspective. We do sometimes talk about companies with market caps as high as $700 billion like Apple. But 114, that's not too bad. Price to earnings ratio 19.88, dividend yield of 2.11. So Gary, I guess the question really is, if you're going global and you're looking at pharma, would Amgen be on your shopping list?
I think it could, because it's, again, I mean, it's got a huge suite of products as well, but it's also not particularly expensive if you compare it to other pharma companies. I mean, you can see there on a PE of 19, I think it's sitting on a forward of about, it's below 15.
Yeah.
And that's just because of the sort of a little price decline. You've had about a 16% decline in the sell-off recently.
Yes.
At the same time, not many pharma companies are paying a dividend like this company is. So they started paying their dividend in 2011 and have been, really increasing that, returning a lot of cash to shareholders. So it's almost, you've got all the excitement around pharma. I mean, they do some great things, but you've also got, almost a level of protection.
Solidity. And multiple products, not one Hail Mary,
And I mean, they're always looking at new products. I mean, you obviously mentioned Neulestra and a couple of the other things. I mean, some of their products are coming off patent quite soon, and there are some what they call biosimilar drugs that are coming to the market too.
So that's a threat to them, right? So biosimilars, because the way EPO gets made is they use some sort of sometimes they use eggs, in fact, to make, I think the EPO production process involves some kind of guinea pig, literally, an animal, which they use to kind of create synthetic EPO, which is human growth hormone and so on and so forth, all good and well. So then biosimilars are like the copies, the generic version of these biotechnology
Exactly
drugs.
right. And I mean, then you get sort of the whole patent war coming up.
Because there's 20 years, right? It's the normal
20
patent
years.
period.
And like I said, a couple of their drugs are coming off patent, but they've got, I think, 9 new biosimilar things that they're bringing into the market as well to compete with very, very sort of profitable products. So they also taking.
Let's look at that share price, because as you can see there, it does a little bit of a dive at the end, but it's been a very successful 5-year run for them. Is that specific to Amgen, or is it perhaps just the overall market?
No, it's
because the whole biotech market has sort of cooled down a little bit, and that was because it had perhaps become very, very toasty. So when the market generally took a little bit of a tumble in the last month, this was where some of the pain was first
100%
felt.
right. I mean, you start looking at these stocks trading on 40, 50 PEs, and you think, where should I be taking off if this is going to be a collapse, and they inevitably get punished.
Okay, so I think it's clear that what Amgen is a company in an exciting area of the market, but it's not so leading edge that it's bleeding edge, because we know there are other biotech companies that have like one drug in development and it's either going to be hero or zero. This is the kind of company you would buy if you like that space, but you think that
you want just a
little
margin
bit
of safety as well.
And so, they've got something exciting and new like that, cholesterol drug. If it works, yes, it's going to be 10% of additional profits, but it's not going to be a nightmare if for some reason it blows out.
Yes.
Hot or not on this one?
Yeah, I think I'm going to go not hot. I mean, it does provide a margin of safety, but I think we're going to look at more exciting companies than this one today.
Excellent. Okay, good. Well, I'm going to go with hot on this one.